Let's talk about fear. Fear is a powerful emotion. And like most emotion, it really depends on what you do in the presence of those emotions. Fear can be a powerful headwind or tailwind. Fear, by definition, is a distressed emotion aroused by impending danger, evil, pain, whether the threat is real or imagined, the feeling or the condition of being afraid. It doesn't matter if you're scared of a noise that you hear while in bed or walking up some creepy red glowing stairs, being trapped in a small space, or some scary noise you hear in the dark. Fear does something to us. While I'm not fearful what will happen with metals as I am long-term bullish, at the same time I am short-term bearish and fearful of what may happen over the next few months. I kind of feel like it's March of 2022 all over again, as it appears that gold, silver, and platinum may be falling knives, and we don't catch falling knives around here. Here's the good news. Gold and silver really have done a great job of holding their own during this period of increasing interest rates and yields. All the Fed has done is simply create a new way to kick the can down the road. But as my mama once said when I ran from a whooping, at some point you've got to come home. Now here's the bad news, which is actually really good news. I think it is very likely that without some pick your color of swan event, we are likely to see gold touch 1850 and silver below $22. The only question is what is going to happen when they reach those support levels. Unfortunately, we won't know that until we actually get closer. Now that you know the numbers I'm looking at, let me share 5 reasons why I believe this will happen. First, fear, or should I say the lack of fear in the markets. Nothing moves the price of metals like people running from the stock market to commodities. And if you haven't been watching the stock market lately, it's absolutely risk on at this moment, and people are trying to ride what they believe is the new leg of a stock bull market. Why is that? Well, that's the second reason. There's this narrative about team soft landing. For most of 2022 and this year, people have been screaming that we would have a recession, which would have caused people to move from risk on assets to risk off. However, more and more people are starting to buy into the hype that not only will we avoid a recession, but somehow the Fed has engineered a soft landing. Like I said earlier, all they have done is simply kick the can down the road, but eventually you've got to come home. As this soft landing narrative continues, it is only encouraging more people to FOMO into the stock market. In reality, it's not much different than what Lucy used to do to Charlie Brown with the football. Third, while the technicals for gold and silver haven't completely broken down, technical support was supposed to be around 1910. And additionally, losing the psychological support of $1,900 is very bad and somewhat of a double whammy for gold. On top of that, both metals are now below their 50 and 200-day moving averages. And while we haven't seen the death cross, which is the 50-day moving average, crossing below the 200-day moving average, the death cross ultimately will confirm weakness and signal a new bearish trend in the market. That will definitely signal lower prices. Number 4, while recession seems much more likely in 24 or even 25, as suggested by Jeff Christian in the CPM group, a recession is likely to pull metals lower as well, at least in the short term. Next, as the fears of impending doom have subsided, and as Team Soft Landing continues to lead the narrative, we've also seen interest in gold and silver ETFs reverse out, which has also continued to soften prices. Lastly, let's talk about the central bank buying, since it's one of the pumpers' favorite points to make. I shared this graphic from CPM group before, but I want you to notice with all the central bank buying that has happened over the last, let's call it decade, gold represents a very small percentage of their reserves. I also shared that central banks hold about 20% of all the gold in existence, which means about 80% is available and or in the hands of investors, which is why fear is so important to moving the price of gold and silver. Listen to this interview from Dr. Prinz.
Central banks have already had a record year buying gold for other reasons, right? The retail investor has much more potential to buy much more gold. Central banks are only 20% of the gold market. They only own 20% of the excavated gold reserves. There's a big amount of opportunity for retail to get on board with that. And if we have seen gold rise because of China, of Russia, of India, of their stockpiling gold on their own reserves, and of them talking about gold to their own populations. Well, just if you multiply that out across the rest of the world and combine it with the interest of a demographic that is involved in its own investing and looking for opportunities of preserving and growing wealth going forward, and coming to gold already, then you actually have a massive amount of money that can continue to calibrate. And not just into gold. Gold is the gateway into copper, into silver, into uranium, into lithium, into cobalt, into zinc, into all of these commodities.
I think she really nailed it. There's a lot more room for the retail investor to get involved with gold. We often hear Rick Rule talk about the 0.5% of people that own gold. Return to the average of around 2% could be like spraying lighter fluid on your barbecue grill. But what would motivate people to move to buy up that 80% and start buying more gold and silver? Yeah, fear in the market, fear of what's happening in the economy. What I will say about central bank buying, I do believe that central bank buying is what has helped gold prices hold steady along with silver. It's helped them hold their ground relatively well considering all the headwinds. Regardless, Dr. Print is correct that there is a lot of opportunity for retail, but retail will not rotate out of stocks into metals until there's fear. So listen to the equity market. There's not a lot of fear on their side. If there is, it's more FOMO than anything else. Think back to what Powell said when he started this interest rate hiking cycle. He said the tightening was going to cause a lot of pain. Have we really felt or seen a lot of pain? I mean, some of us have maybe, but not the broader population. Despite the fact that interest rates increasing more than 5%, the economy has actually been reasonably strong. Supply chains have been largely repaired. The job market is okay. Unemployment hasn't skyrocketed. The housing market hasn't collapsed. The dollar is not at its highs of 115, but 103, that isn't all that far. Let's not forget that there is a decent possibility of a second wave of inflation, be it from higher energy and oil costs, the housing market, or a mix of both. I just don't think that we're going to see anything crazy like last year when it comes to prices, but that doesn't mean they won't be soft over the next few months. I don't think we're going to see the low $21 silver or $1,700 gold, but it has to be on the table. I've shown you this index before, but take a look at the current reading on the Fear and Greed Index as we currently sit at neutral. And notice that a year ago we were at greed, a month ago it was extreme greed, and a week ago just greed. Okay, Dr. Stacker, what am I supposed to do with all this information? One, I think you shouldn't be in a rush to buy anything until we get around the 1860 to 1850 mark, unless it's a great deal and premiums are really low, because that's going to be your better buying opportunity. Two, silver is very interesting as it's held up reasonably well, but we all know it's a much more volatile market. Plus, who are we kidding? Silver isn't going anywhere until gold leads the way, which is why I think stacking gold right now is a better play, especially as its price doesn't tend to fall as far as silver does. And let's not forget what happened last year. The spot price of silver plummeted, but it almost didn't matter as you couldn't get an ounce of silver for less than $23, $24. From a technical analysis perspective, we have no idea what gold will do once it breaks through the $2,100 level. We can't say the same thing about silver. We know silver has several resistance points between where it is now and the $30 mark. Right now, I'm going to let the prices fall and focus on gold until it reaches a new high, and then shift my stacking to silver and stacking silver really hard in anticipation of silver's larger price movement. Unfortunately, this process is going to require patience, confidence, and even courage in your conviction to continue the course, as there will likely be short-term price weaknesses. And if you're dabbling in minor stocks, you either need to be committed to the belief that they are highly undervalued and you have the stomach to endure your current losses and even more, or you simply need to wait until prices start to trend up again. If I'm right, you will need to be patient, as it is likely we will see very soft prices until December or January. Watch the conditions and look for fear in the economy and the markets. That should give you a head start. In the comments section, do you think we're going to have a soft landing, recession, or no landing this year? Do you believe prices will continue to fall? Or put an A+ in the comment section to let everyone know that you always stack smarter and never stop learning.